Hi there. Welcome to my channel. I am Shailesh Kumar, creator of Astute Investors Calculus newsletter. If small cap stocks and value investing is your thing, you are in the right place. Let me share my strategies and my ideas with you. Let's go make some money. The most frustrating challenge for a value investor is not having reliable data, whether it is screening for undervalued stocks or conducting the deep due diligence they require. Over the years, I have tried many tools, including some very expensive ones, but none have worked as seamlessly as Stock Rover. It is a platform clearly designed to fit perfectly into the workflow of a disciplined value investor like you. Let me quickly tell you why I think Stock Rover is an essential tool for value investors. 1. Robust screening. It lets you peel back the layers and go beyond the usual price by earning ratios. 2. Deep financial data. With 10 years of line item data, you can easily spot trends and anomalies. 3. Portfolio management. Sync with your brokerage or manage portfolios manually to test strategies. 4. Correlation analysis. Perfect for calculating position sizes and reducing risk. And 5. Future income estimation, a game changer for dividend and income investors. Let me walk you through my typical workflow as a value investor. Step 1. Screening for value stocks. If you look at the left, you have several tabs over here under my collections. The screeners tab is what I want to draw your attention to. This is where I spend most of my time, almost every day, screening, trying to find some new stocks that I may be able to research. If you look at this screener in the second panel from the left, you will see that I have built many different screeners and they are organized within folders such as small cap value screeners, mid cap value screeners, large cap value screeners, etc. And under each of these folders, I have individual screeners. For example, the first one you see over here says small cap growth at reasonable price, and there's a number 2, which is my naming convention. I want to run a screener per day, and number 2 tells me that if today is the 2nd of the month, I'll go ahead and run this growth at a reasonable price screener. I want to show you what a screener looks like. I also want to show you what you can do in Stock Rover. So typically, if you run a traditional value screener, if you go to actions over here, you can look at the criteria of what that screener involves. And this particular screener, you are looking for price to earning ratio between 2 and 10, price to sales less than 2, price to book less than 1.5, and then I'm looking for a 5-year average EPS and sales growth percentage of 2% or more. Additionally, to find small cap stocks, I have decided to look between the market capitalization of $30 million to $2 billion. So when you run the screeners, at the bottom you'll see all the stocks that passed your criteria, and come back to this main panel, you'll see all the stocks over here. This is a very simple screener, but you can actually do very complicated screeners where you create your custom criteria. For example, this particular screener is called Buffettology inspired. This was written up in the book Buffettology, and if you look over here, it's full of equations, right? The first equation says I want my EPS today to be greater than the EPS 5 years ago, and EPS 5 years ago to be greater than EPS 9 years ago. Pretty much we are looking for some sort of a earnings per share growth and some consistency in that. Similarly, I want my return on equity to be a certain amount. My long-term debt today is less than or equal to 5 times my net income. So my net income is 5 times more than the long-term debt. My return on invested capital, you can click on it and you can see the actual equation. This is your window where you create your own equations. So my return on capital, so I think this is actually taking an average, is divided by 10. So my 10-year average is greater than or equal to 12. So this is the reason I like Stock Rover, because I am not limited to some pre-packaged screeners. I can actually create my own and make it as simple or complicated or complex as my needs may be. So once we run the screener, then what's the next step? So the next step is I'm going to review each of the stocks one at a time and decide whether I'm interested in pursuing this stock further or not. Pursuing further does not mean I'm going to buy it. I still need to conduct deeper due diligence on this stock. One of the things you can do, let's say if you click on this particular stock for preferred bank, if you look at the right, there's a lot of information on the right. There's a stock profile, description, some scores over here for value, growth, quality, sentiment, and F-score. Stock Rover actually calculates these values for you. These are pre-calculated. They also have a calculation of margin of safety. As a value investor, you can take this as a guidance, but I would recommend that you actually do your own analysis. Stock Rover also gives you estimates. For example, the current price to earnings ratio on a trailing basis is 8.6 and the forward PE is 9.6. The PEG is below 1, is 0.9. So the stock actually does look a little bit undervalued. There are some historical returns data which you may or may not be interested in. There is more valuation data, price to earnings we already saw. There's price to sales, free cash flow, price to book, and so on. There are some growth estimates as well if you're interested in that. Just remember that a lot of analysts are going through this analysis to come up with this estimate, and they may or may not be accurate. You can also get a lot of profitability data, for example, your gross margin, net margin, and return on asset, return on equity, as well as return on invested capital. If you're interested in technical data, you get some basic numbers over here. I actually cannot speak much to this data because I'm not a technicals guy. Stock Rover creates a lot of ratings for every stock that they cover. You have a rating for growth, you have a rating for valuation, efficiency is pretty much profitability, financial strength, dividends, and momentum. Then you have dividends data, and then you have some comparison with the competitors, some data about the main holders, in terms of funds for the stock, and then you have links where you can go for further research. This is a very good summary of the stock, but this is not all. If you look at the top, you can see visuals, news, analysts, and statements. Statements is where I personally would spend a lot of time, and this is where you'll get your income statement and balance sheet summarized. Over here, it only gives you a single line item for asset, but typically for most stocks, you will get much more detail. Let's look at this Silicon Motion Technology, for example. This is your proper full balance sheet. And again, your income statement, your cash flow statement, and you can actually pull the actual filing for most of the companies they cover. So let's take a look at summary, for example, which actually gives you the high level data. I want to draw your attention to these charts over here. So they tell you the trend, right? So the revenue has kind of gone up in the past 10 years, but it has not been very consistent. They have been very good at growing their working capital. They have been adding assets. Cash flow has been a little bit inconsistent, and the profitability has been good in the past, but in the last few years it has gone down. The last column is your compounded annual growth rate, or CAGR, for each of these line items. You can also see that on the balance sheet, for example. So you have more line items where this number is calculated for you. This is interesting because you can very quickly say that yes, my inventories have been growing at 17% CAGR, but my revenue is only growing at 10% or 11% CAGR for the last 10 years. So what's going on over here? Are we not able to sell what we're making? So those are the questions you can ask based on the data that you see over here. Ultimately, if you like a stock and you want to dig further, you can right click on this arrow over here and you can say, I want to add this to a watch list. Now you can create any number of watch lists you want. I think your plan would have a limit of 60 or something like that. You create a new watch list, or you pick from one of the existing ones that you have created, and let's say I want to add it to value plus momentum stocks, so I add it there. So you can see that it has been added to this watch list. So the next step is to go to the watch list, and now if you look at the value plus momentum stocks watch list, you will see that this has been added. So okay, just to briefly stop over here, the typical workflow is going to be screen for stocks, find the stocks that you like based on the very top level information, and put those stocks in your watch list. Then every now and then, maybe I would recommend maybe once or twice a week, you would come to your watch list and pull up each stock, and then you want to review it in much more detail than you have done so far, right? And the reviewing in more detail actually means that you would pull up the data in Stock Rover, but you'll also go to the SEC filings, pull up the annual reports, pull up the quarterly reports, listen to management calls, take notes, and then follow up any loose ends that you find, and just do your research that way and come to a conclusion about whether this is a good purchase or not. So you can do all this in Stock Rover. For example, here let me put Flex. So these are all the quarterly reports and filed over here, and they would also have annual reports as well. This would let you change your filing term from quarterly to annual. Once you have done in the watch list, you do the research and then you determine what to buy. Generally, what I would do is, let's say after my research, I say Flex is a good stock to buy. I'm going to color code this one. Let's say dark purple. So I know if I color code something as dark purple, this is the stock that I want to purchase. Once I buy the stock, I may change the color or I may just remove it from the watch list completely because I don't need to review this any further. And the stock that I purchase would eventually show up in the portfolios. The reason it would show up in the portfolios is because you have connected your portfolio to your Stock Rover account. And this is easy to do. If you go to the brokerage connect over here in the portfolio tools, you can see all these accounts that I have connected to Stock Rover, and you can add a new account. Syncs the prices automatically, but if you just go and refresh all, it will sync all the transactions from your brokerage automatically as well. So let's go back to brokerage. In this brokerage account, I have all these holdings. Now you can see that I have this under a folder called test portfolios. For me, test portfolios are not real brokerage accounts. These are the portfolios that I'm testing different strategies, or I have built it for analyzing some aspect of the portfolio. So what kind of analysis can I do? If you go to the portfolio tools and click on analytics, you can see that you will be able to pull up all the portfolios that you're tracking. And for example, over here I have checked the model dividend growth portfolio. And then you come to the portfolio analytics and it will tell you the start value, IRR, and the time weighted return. And then you have a growth chart for your portfolio and you can set up the benchmark to compare it with. In this case, it's S&P 500, and you can see how your portfolio performed against S&P 500. This return data is actually time weighted returns. So if you have a capital inflows and capital outflows from your account, it adjusts for that. Other things you can do with your portfolio analytics, if you want to dig deeper, you can actually look at your correlation with the benchmark. Your beta, what is your max drawdown, your volatility, and the volatility for the benchmark as well. And you can calculate your Sharpe ratios. So this is very good for you to track how your portfolio is doing over time. The other thing that is really important for me, and I think for a lot of investors as well, is this correlation tab. Over here, you can look at all your holdings and you can see how each stock is correlated to every other stock in your portfolio. Why is this important? You see this red square over here. This is the Black Hills, which is the utility, and Atmos Energy, which is another utility. And you see that these two stocks have a very high correlation. But at the same time, Black Hills has not only low, but it's a negative correlation with Broadcom, which is very intuitive. But once you look at the correlations between all your stocks in your portfolio, you can actually check and remove the duplicates. Like you don't want to have too many stocks that are very highly correlated because you don't have too much diversification in that case. You want to have a diversified portfolio where each asset is lightly or counter correlated to each other, and this will give you a much better risk profile for your portfolio, and it will help your portfolio to be less volatile over time. So you want that. The other thing you can do is to rebalance your portfolio. Let's say you have a way of deciding how much of your portfolio you want to allocate to each stock. I actually use this concept called Kelly fractions or Kelly criteria to determine my optimum portfolio weights. Many other investors would just do an equal weighted portfolio where each stock in the portfolio gets an equal weighting. Doesn't matter what method you choose, but over time your portfolio weights, the actual weights, will drift from your target weights, and you would like to bring it back. To do that, you will sell some of the stocks that have gone above the target because the price appreciated, and use those proceeds to buy more of the stocks that have gone down. So you bring down the weight to the goal weight, for the appreciated stocks, and you bring up the weight to the goal weight for the stocks that have gone down. The rebalancing feature in Stock Rover lets you do that. It tells you what your current value percentage is. This is your current allocation, and then this is your planned allocation. And what you can do is you can go to this More tab and say allocate equal weight to each position, or allocate equal weight within sectors, and then you have a sector weight. If you don't want to do equal weighting, you can manually type in what the weighting is that you want for each stock. So maybe you want to put 50% in AbbVie, and then the rest you want to distribute among all the other stocks. It's up to you. You can type it in. You can customize these weights, and after you've done that, it will recalculate the allocation, and it will tell you that you need to sell one share of this stock, buy one. Green is buy 3 shares, sell 9 shares of this, because for Broadcom I have very high allocation currently. It will tell you what transactions you need to make to bring your portfolio back to your allocations, and this is how you rebalance. And I suggest you rebalance your portfolio frequently, at least once a quarter, but you may actually want to do it more often if you have more volatile stocks. So it's up to you. So this is one of the features that I really love about Stock Rover. And finally, if you are investing for dividends, this particular portfolio I picked as an example is a model dividend growth portfolio. If you are investing for dividends, you probably want to track how much in dividends you're going to get this year or next year, and how it's growing. Stock Rover lets you do that. You click on the future income over here, and then you pick the portfolio that you want to model, and it will tell you by month how much you can expect as dividend income. Here, in this case, we have assumed reinvestment, but if you are not going to reinvest dividends, you can uncheck this and it will give you the new numbers without reinvestments. So the numbers would differ a little bit. If you reinvest, your dividends will grow faster over time. This is a summary level and it can model out for 2 years. You could actually click on this holdings and it will tell you month by month which of your stocks are paying you how much that month, and it also tells you on which day. So this is one of the most requested features for dividend growth investors, because the whole rationale for that strategy is to see your dividends growing over time, and this gives you a very good base for doing that. So you have seen how capable Stock Rover is, and it can handle everything right from the time when you start looking for a stock to buy, from all the way up to when you actually have the stock in your portfolio, and you can manage your portfolio as well. So this gives you a complete workflow. This is actually a very advanced software, and I'm very happy that I am able to find it, and I have been using this for since 2019, so it has been about 5 years now, and it has done really well for me. How much does it cost? So a lot of features that I showed you are in the highest plan for Stock Rover, which is called Premium Plus. And if you look at the Premium plan, Premium Plus is the highest plan, and it only costs you $27.99 per month. It's very affordable. I remember that once I had subscribed to this soft that would pull data from Edgar on the SEC platform for financial reporting, and then it would process the data. It will make it presentable. You're able to pretty much read the financial statements in a much more friendlier way. That cost me about $5,000 a year. So the professional software like this can get very expensive, and Stock Rover actually gives me all the same data, and it lets me manage my portfolio. It lets me do the rebalancing, track my income. It gives me much more than that, and it only costs me $27.99 per month. Or you can sign up for 2 years for less than $500, which is 1/10 of the price, and you get 2 years for that. So I think if you are a serious investor, this is an investment that you really want to make, because it will free up so much of your time, and it will give you so many new ideas that you can pursue. This software is worth many more times than what it's costing. If you're a value investor, this is the kind of stuff that you want to put your money in. If you are interested in trying this out, you can actually get a free 2-week trial of software. So instead of buying the plan right away, you click the link that I have in the description below, and they will give you a 2-week trial. You just sign up, and with this trial you can try out all the features in Stock Rover at the Premium Plus level, and you have 2 weeks to try them out. You can figure out your workflow, see if it works for you, how easy it makes everything, or maybe you compare it against other plans, other software, which I frankly have had no need to do it. But if you're already using something else, you may want to do it just to convince yourself that this is the best software you can find for a fundamental or a value investor in the marketplace. Use it for 2 weeks, try it out, convince yourself this is what you want, and then you buy a monthly or annual or even 2 year subscription for the software. And you can, believe me, you can base your entire investment process on this software. In the last 5 years of using it, I have never had any issues about stability of the software, about it giving me wrong data, etc. I've been very, very happy with it, and I think you'll be as well. So click the link that I have in description, try it out, and sign up if you like it. And I hope you find as much value out of this as I have so far. Thank you very much. And if you like this, please click the like button and subscribe to my channel so I can send you much more videos like this and more stock specific videos to help you in your investment journey. Thank you. Bye.